Hey there traders, this is Steve Miley, the market chartist for FXE Explained, and our regular weekly macro watch update for the week commencing the 20th of December 2021. Omicron and hawkish central bank fears send stocks lower. Let's kick off by looking at those macroeconomic and geopolitical developments over the past week then. So, first of all, concerns that the Omicron variant could contribute to supply chain disruptions and weigh on global economic growth have resurfaced over the past week. This has been driven by global medical institutions' warnings of Omicron being more contagious, the surging number of cases in many countries, for example the UK, worries about the efficacy of vaccines, and new restrictions being introduced globally. The Federal Open Market Committee statement on Wednesday saw a more hawkish Fed, much of which was already discounted by the market. As expected, the Fed have accelerated the tapering of bond purchases and signalled interest rate hikes in 2022. Somewhat unexpected though, on Thursday the Bank of England raised interest rates after high inflation data recently, which has not been anticipated by the market. Now let's have a look at the global financial market developments for the week ending 17th of December last week. Well, the equity markets did prod higher through the week in here and post the FOMC, but ended up on Thursday and Friday lower, with the US equity markets leading global stock averages lower, and some real vulnerability in here. Markets not being able to progress to the upside in here over the past few weeks. The Nasdaq and the tech sector generally led equity markets lower at the end of last week and does look vulnerable. US yields are actually lower post-Fed, and so Thursday, Friday we see a move to lower yields despite the more hawkish tone set by the Fed. And we saw solid US dollar gains. Markets marking time in here over the past couple of weeks, but strong gains after losses of Wednesday, Thursday, strong gains on Friday, signalling an underlying positive tone for the US dollar, particularly against G3 currencies. And despite that unexpected interest rate hike by the Bank of England, which did initially send the pound higher, cable does remain vulnerable, losing ground on Friday. In the commodity markets, gold signalled a more positive tone, breaking to the upside. Oil marked time and continues upside risk since the rebound we saw earlier this month. And copper did push to a new multi-week low in here, a new multi-week low. Still very much in a wider range environment and did rebound towards the end of the week, but does stay vulnerable, negative within the broader range. So then let's take a look at the week ahead, the week commencing the 20th December 2021. Well, the Omicron variant, we're going to continue to watch for more details of the strain, this new strain of COVID-19, and looking at how it is spreading globally, and also looking at evidence regarding how contagious it is, and also how deadly it is. We're going to keep an eye on some central banks, but it's fairly quiet this week. We had the RBA meeting minutes on Tuesday, and the Bank of Japan meeting minutes Wednesday. And a fairly quiet data calendar overall. As I say, nothing here actually on Monday. We had the RBA meeting minutes and Canadian retail sales Tuesday. Those BOJ meeting minutes on Wednesday. UK GDP, US GDP, and also US PCE data. We get US durable goods on Thursday. And we have European holidays for the Christmas Eve on Thursday. So European markets close, with the UK and US markets closing for a half day. So I'm going to wish you all a great trading week. I'm going to wish you all a wonderful holiday season. This is going to be the last macro watch until 2022. So do have a great trading week. Stay safe out there with this new Omicron variant. Enjoy the holiday season. We'll be back with you with another macro watch for FX Explained in the new year 2022. Until then, have a great trading week. So traders, don't forget to catch us on the next FX Explained macro watch and all the great content on fxexplained.co.uk.